Hello, everybody. How are you all doing tonight? I hope you guys have had a fantastic day trading so far. At the end of the night, I would like to always review what has happened with Bitcoin. It's really important to take a look at the previous day and compare it to the current day as well, just to kind of get an idea of how we've wrapped up. And right now, it's April the 12th. It's about 11:20 p.m. Central Standard Time. And it's pretty much done the day, we can pretty much say, here in North America. So let's start off with the coin market cap. But before we do, make sure you guys, or not make sure, that's completely came off wrong. I would really appreciate if you guys upvoted my content on Steam. It's the only way that I'll actually make an income from you guys, and that's how I keep everything for free always. It's just a small way of reciprocating the respect for each other, right? And I will never, you guys have my word, I will never have any type of paid content or paid group or paid subscription or anything like that. It will strictly just be YouTube and Steam. So I'd always make sure that I would appreciate it if you guys upvoted really quickly on Steam it there. So let's take a look at the coin market cap to see how we have been looking thus far. And we can see that some of the big winners today in double digits have clearly been Ripple, doing fantastic there at about a 15% gain. IOTA, it pretty much killed it today, guys. It went from about $1.10 to $1.33 with a 23% gain. And we just keep looking down on CoinMarketCap. And what we can see is that a lot of money has been poured back and a lot more faith has been restored in the cryptocurrency overall market in general, right? But we have to keep something in mind, okay, that I've been wanting to talk about for a while now. I wanted to talk about new money coming into the cryptocurrency scene. So, in order for us to actually reach something astronomical, for us to get to our $600 billion, six, sorry, 600 billion dollar market cap again, that's something that's fairly normal for Bitcoin that we've achieved before. When we combine it with things like media, don't mind myself doing this in the dark, by the way. I know that there's not a lot of light, but late at night, I kind of like to unwind. It's about 11:30 p.m. already, and it's just kind of my way of relaxing more so near the end of the night because I'm completely done trading now. So if we take a look at new money coming in, right, we have to think of it like this. Yes, I do believe that we will eventually reach something astronomical in terms of market cap this year. I do believe we're going to highly exceed $1 billion. In fact, my overall guess is that we're going to go anywhere between okay, 3 and 4 billion dollars in terms of market cap for all of cryptocurrency in general. There's going to be a lot of new coins that will be surfacing in the market, and a lot of coins in general. They're going to reach some astronomical numbers. That's going to be very momentous in the history of cryptocurrency in general. Now, we have to remember and think about how money will actually be added in the market. So think of it like this, guys. The way Bitcoin will actually end up reaching, or the market cap in general of cryptocurrency reaching well over a billion, 2 billion, 3 billion, $4 billion is simple. Something astronomical has to happen in terms of from the fundamental world, right? Maybe Bitcoin Lightning will come out later in the year. Maybe Litecoin Cash will actually finally adopt LightPay, right? Maybe Ripple itself will finally be adopted across many different financial institutions in the world. Maybe Donald Trump will say something like Bitcoin, we approve of it. It is something great and you guys should be looking at it, right? Maybe Google will need to adopt something like Bitcoin, right? Maybe some social media website will actually need to develop some sort of blockchain technology to host their servers on, right? Maybe they'll decentralize it. Maybe Amazon will say something like, okay, guys, we are actually going to accept a Bitcoin as a payment. So we have to think of something radical that has to happen in order for new money and investors to pour money into the market. Now, until something like that happens, I do believe that we're going to be fairly stagnant and we will sideways trend once we reach a very specific market cap in general, right? So I think that this year is the year of regulation, and that's something that all need to understand, right? Governments are stepping in. Lots of FUD when it comes to ICO. Lots of people are being taken advantage of from left to right, and that's not something that we want in the cryptocurrency scene. We want it regulated to some sort of extent because it protects us And it also encourages new people to come into the scene. If we think of people getting ripped off all the time for ICOs, well, if you guys were new in the cryptocurrency scene or you've just heard about cryptocurrency and you wanted to jump in, if so many people are getting scammed, you would actually be very discouraged from getting into the market. So, unfortunately, because so many presidents or CEOs are running off after they have their ICO launch, right, and they're moving to some island, right, in the Bahamas with their $5-6 million that they've taken from the public, well, that's not really a cool thing to do. So we need to really understand that cryptocurrency needs to be regulated, okay? It really, really does need to be regulated. And you guys can bank on the fact that every country, 2018, 2019, and so on, you guys are going to be taxed a lot, okay? So make sure if you guys are actually day and swing traders and you're making a fairly substantial amount from trading, or even if you're making equivalent to minimum wage, you guys can definitely count on the fact that the government will tax you guys. And if you guys try to evade these taxes, okay, it's going to catch up to you. Trust me, it will. So make sure you guys are setting aside, 15, 20, 25, 45, whatever percentage, right, that you think that you fall into the bracket of. Please set it aside because I just don't want you guys to get burned right now as well, okay? So, anyways, I just wanted to give you guys a quick rundown of my thoughts with new money. It's a very general interpretation of it as well, okay? So, let's talk about Bitcoin and how the 24-hour volume is actually trending right now, okay? If we look at the 24-hour volume, guys, okay, the 24-hour volume of Bitcoin has actually almost reached already, okay? It's almost reached, take a look at this right here, $1 billion, which is quite astronomical in my personal opinion, okay? Actually, I don't know, am I looking at the right one? Let me just take a look at this again right here. Yeah, I am looking at the right one. Okay. I just want to make sure that that wasn't like a typo or something like that because that's a really large number in general, right? We take a look at the past few days, guys. The past few months, look at this 24-hour volume. And what we see is that it's been a very long time since we've actually reached $28 billion. Let's go to the past 3 months here, okay? Or sorry, since we've reached $8 billion, we've been kind of sideways, 4 billion, 3 billion, 6 billion sometimes. The last time that we actually reached $8 billion was on March 9th, which was over a month ago. Now, when's the last time we've actually averaged more than about 900 billion, right? Or sorry, 9 billion, close to one. Is that 9 billion? Am I reading that right there? Yes, $9 billion, okay? $9 billion. Let's see when we've actually come close to $9 to $10 billion. I had to take a double take there because the number's so large, right? Well, the last time that we actually even came close, guys, to something of that magnitude and caliber was on February the 21st, right? February the 21st, which was a very long time ago. The big date that I'm sure that we all remember was actually February 6th, where we reached $14 billion. That's where we actually reached that low of $6,000 on Bitfinex. So after those days, right? Or prior to those days, rather, that's where we're kind of averaging. So I firmly believe that this may be a bear trap, but at the same time, we have to acknowledge the fact that there's so much money is being poured back into the cryptocurrency scene. So does this actually imply that excuse me, let me have a sip of water here. So, does this actually imply that a lot of faith is being instilled or bestowed or being put back into the cryptocurrency scene? We are now at $310 billion for the market cap, which is phenomenal. Just a few days ago, guys, we were talking about Bitcoin and the whole overall crypto market capitalization. We're at like 253. We topped off and rounded off around 275. So in the past few days alone, we've gained about $35 billion, which is about 10 to 20% in general in the past week. So that's something that needs to be acknowledged as well. But the big question that everybody is wondering about, guys, is this actually is this actually a bear trap right here? So we've already evaluated from the perspective of Elliott wave. So we're gonna clear off all of these Elliott waves here right now. And what we're going to do is talk about it from the perspective of RSI and also moving averages as well, because there's a lot of traders out there that are indeed moving average traders, right? So if we take a look here, this is called the death cross. I'm going to write it out for you guys, for the people that are new to my channel, because what I like to do is I like to make sure that you guys understand some of the technical indicators that I use. Exponential moving average, okay? That's the yellow one. And then we also have the white one as well right here, okay? The white one is the 200 moving average, okay? That's the 200 moving average that you guys see. That should be very clear for you guys to understand, right? The yellow line is the 55 moving average. And the reason why I use 55 instead of the 50 moving average is because 50 is a Fibonacci number. If you take 21 plus 34, that's a Fibonacci number. So Fibonacci numbers will go something like 8, 13, 21, 34, and so on, right? So the next Fibonacci number would be 34 plus 55, which is equal to 89. But that's not a moving average I really use, nor a lot of people. So 55 is one of my favorite moving averages to use. So we need to talk about the death cross again, okay? The death cross is when, think of it like this, okay? The death cross is when the 200 moving average ends up becoming on top of the 50 moving average, or 55, I'll say in my case, okay? That is what we call the death cross. Now, the death cross, think of the moving averages as a support, okay? It takes a combination, or a compilation rather, of the past 200 samples, okay? The past 200 bars in these particular days. So because I'm on the daily, it's taking the past 200 days of data and it's now compiling an average of it, okay? So it's taking previous price history and action and combining it into a line where it moves and it ebbs and it flows accordingly. Now the 55 moving average would be a compilation of the past 55 days. So what we try to look for as a moving average trader is we like to see when this crosses. So if, for example, this crossed right here, this is called a death cross, where the 200 moving average ends up being above the 55 moving average. But now if we actually end up getting the opposite way, where the 200 is now on the bottom, then that's what we call a golden crossover. Now let me give you guys a golden crossover example, okay? I'm just going to bring this really far down to show you guys what a golden crossover actually looks like. So you guys will also understand and we can all be on the same page, because what I want is for you guys to understand the terminology when I talk about it, okay? So here we go. So this is now called a golden crossover, where the white line, the 200 moving average, right, is now below, and now the 55 moving average, oh, sorry, the 200 moving average is below, and the 55 moving average is actually above, right? So the 200 moving average is actually supporting all of it below. Now, the goal is to keep holding your Bitcoin and to ride this as an investor and long-term holder for Bitcoin. And you guys will not dare even sell your Bitcoin until, for example, the 200 moving average, okay, ends up being on top, okay? So from an investor perspective, you guys would have actually held this thing for an incredibly long time. Now, one would argue this right here, okay? One would argue, yeah, I could have actually sold it right here at the the $19,000 mark, right? But let's say that this death cross never would have happened at all. Okay, if this death cross didn't happen in any way, well, you guys would have had no reason to sell it from an investor perspective. So this is one of the strategies that a lot of people use to employ for holding longer term. But of course, smart investors and smart money, they'll have known that this was roughly near the top already, just based on many, many different indicators, okay? So if we look at it from the perspective of moving averages, what we can see is this gigantic break that finally happened over here. What I've been talking about for many days now, guys, is this right here, right? I've been talking about how there's pretty much, we'll consider some of that region a bull trapped region, right? We're gonna basically talk about this particular section right here. Now let's try to make sure that we actually draw it accordingly and capture a lot of these trend lines. So what we are looking for is basically a break above this line, right? And it actually has to break a lot more sufficiently than this above it. Now I personally don't think that it's gonna um sorry I let me backtrack for a second, okay? I personally don't think we're just going to shoot past it right now because we've got many hurdles along the way, right? Too many hurdles. We have to take, first of all, Fibonacci. We're probably hitting a Fibonacci number right now. Yeah, I was just going to say, right, if we take a look at this fib region from this particular swing high over here to this low region right here, we're kind of hovering right around the 236 region right there, right? And it also coincidentally happens to be where we're breaking above over here. So personally, what I think is going on is that let's look at it from many different perspectives. On the 30-minute chart, we are now getting a very beautiful crossover over here, right? With a golden crossover on a low time frame. Now, how would you guys have actually timed it if you guys wanted to actually enter this? Well, entering is all about timing, okay? So the way that you guys should have timed this was you would have used the 55 moving average crossover, right? Right here. So when the 55 moving average crossover happened, you guys should have 100% entered that trade, and it starts to fan out as you can see in this little section right here. Take a look very closely with me, okay? You see this part right there fanning out, right? So what you would have done is you would have gone yourself into a long position as soon as you see it fanning out like that, and then you would have set your stop loss and you would have taken a chance, okay? You would have taken a chance, set your stop loss slightly below the previous swing low right there, and then you would have targeted basically that resistance, that yellow line, which has been formed from very far back, right? If you guys take a look at this resistance, it's been forming since December 17, which is a very massive resistance right now. So if you guys take a look right here, okay, this would have been the play, right? You would have targeted somewhere like right around there. Your risk to reward ratio would have been something ridiculous, like 5.6 to 1. Your stop loss would have been slightly lower than the previous swing low region right here, and you would have targeted roughly 7,750. So that's how you should have played it. Did I personally play it? No, I didn't personally play it myself, and I don't regret it because I actually had many other opportunities that I found on EOS. So I don't regret it at all if I ever miss a play. Nor should you guys ever feel the regret of missing a play, right? If you ever miss a play, don't worry about it. Just feel grateful that you actually now have an opportunity to learn about the play that you miss, because then if you take things from the past and you learn about why you missed it, you can actually focus on the future to see what kind of trades you could be taking to gain profit, right? So we look on the 15-minute chart, we see this massive fanning out where it's pretty much supporting well above the 55 moving average. We take a look on the 30-minute chart and we are actually supporting well above the 55 and especially the 200 average. Same thing on 45-minute chart, same thing on the 2-hour chart, same thing. Actually, here's where it changes, okay? If we go to the 1-hour chart right here, we see this kind of starting to curve slowly around there. The 200 moving average is actually below all of it. But if we look at the 2-hour chart right here, we haven't exactly quite had the 200 moving average supporting all of it below quite yet, okay? And the 3 hours very far from it as well, okay? We are supporting, we're supporting above the 200 moving average, don't get me wrong, but the 200 moving average is not actually supporting below the 55. We would like a golden crossover. Now, the significance for this is that the longer that it stays supported above the 200 moving average, where it's below all of it, it signifies an overall longer bull term trend, right? So on the 4-hour chart right now, what we see is it tried really hard to break above this 200 moving average, but it just simply could not get above it. And now on the 4-hour chart, we're actually getting a bearish spinning top, okay? Now, if you guys are not familiar with the bearish spinning top, let me explain to you the psychology behind it very quickly, okay? A bearish spinning top is something like this. So just bear with me for a moment if you guys know already. A bearish spinning top looks just like that, where there's an equivalent size body and equivalent size wicks on the top and the bottom. What this signifies is that the bulls are starting to slowly lose control, because what it means is if this was the open right here, okay, if this was the open, just as an example, the bulls actually tried to push it all the way up, but by the end of the candle close, the bears actually pushed them all the way back down, but the bulls slightly defended right there, okay? Slightly defended, and that's when you get the centerpiece body, and that's when you get these long wicks. But it more so means that the bulls are slowly losing control. It doesn't mean that they've lost control entirely yet, but it does mean that they're slowly losing control. So that's very important for us to make note of whenever we see these. Now, some people are not candlestick traders, but we have to take a look at the price action, because I firmly believe that candlestick analysis, it gives you a very firm grasp on the story behind what's going on. Firmly believe that candles, guys, they tell a story, okay? They tell a story. Like, for example, right here, we can see many stories that are being told, right? We get a very large green candle that ends up going up like this, right? And then it shoots up like that, but the bulls actually couldn't really quite keep it above $8,000. So the bears actually ended up taking control, pushing it down right here, right? And then this candle opened right here. The bulls tried to push it back up, but they actually lost control, and the bears pushed it all the way back down with this large body. And here we actually ended up getting a candle called an inverted hammer. An inverted hammer signifies that after a downtrend where the bears originally had control, the bulls have tried to push it back up, but the bears rejected it. But the important thing to make note of when we combine these two candles is that the bulls are starting to slowly take over, right? Because the bears have actually lost control. Excuse me, I just gotta wipe my nose here. So the bears have actually taken over right in this candle right there. But think of it like this: bears actually took control, but the bulls are starting to try again. So because we got this inverted hammer where the bulls are starting to try again, well, the bulls most likely were going to take over. But this long wick right there just showed that it couldn't be steady enough. The wick actually is implicative that they tried to push it over $8,000, but they just simply couldn't, right? So now the next one that we can easily guess what was going to happen after this one formed was that there's probably going to be a tug of war. So if you think of a bearish spinning top that we just talked about, think of it as a tug of war between two sides, okay? So there's a tug of war between two sides where each is pushing and pulling. We always have to think of the bulls and the bears as two entities that will actually go back and forth with each other, right? So here, the bulls tried to push it up to the top, but they lost control, pushing it down. So because of these two wicks right here, guys, because of these two wicks, as you guys can see, where I've highlighted in red, that is actually called a tweezer top. And a tweezer top is implicative that the bears are actually starting to gain control, right? So that's something that you guys always need to make sure of, that you understand, okay? Not only that, if we actually take an average sample over time, guys, not a lot of people will actually notice this. If you guys notice right here, right, this is kind of a similar and sideways price action. Would you guys agree, right? It may look like a similar and sideways price action, but if we actually look very closely to the RSI, if we look at the RSI, what do you guys notice? That it is sloping downwards. And what we call this is actually a uh, bearish divergence, right? Where the bears, it's starting to show their true colors a lot more. So what we can see here is that the bears are actually starting to lose control, guys. Or sorry, the bulls are starting to lose control. If we take a look at it from this perspective, right? So we have to understand that we are reaching some dangerously oversold regions right now, okay? But we have to take a look at this and acknowledge, okay? Respect, guys. You have to respect, okay? You guys have to understand when I say this, you have to respect the RSI, okay? And this is why I believe that we are now reaching a more bullish momentum, okay? Take a look at here. You need to treat RSI as resistance and support. Look at how high we reached. We reached 90 RSI on the 2-hour time frame. And because we reached 90 RSI on the 2-hour time frame, when was the last time we reached 90 RSI, guys? Last time we reached 90 RSI was way back in December during the uptrend, right? During the uptrend. So we have to respect the fact that the bulls are absolutely on the offense right now. Though we also have to accept the fact that it seems like a correction might happen very, very shortly, okay? So the way that I'm looking at this right now, if I were to go to a minor time frame, okay, is this wave one right here, okay? What is all this subsection going on over here, right? A lot of people are thinking that this is some sort of ABC corrective pattern, but I personally believe that we are done right now, okay? And this was just make like a 1, 2, 3, 4, and 5 kind of correction in here for its fifth wave flat that was finishing. So where is the actual first wave and where does it begin, right? That's the hard part for us to decipher right now. So if we actually break it down further, and let's just say that we count this as one subwave, do we actually count this as one subwave like that, right? And this is now a truncated fifth wave. Is that a truncated fifth wave? Or do we say that we're still looking for a fifth wave to somewhere, possibly somewhere be in there, right? Is it possible that we're still looking for a fifth wave, right? So if I actually draw, say, from tip to tip like that, right, does that even make sense anymore? Does this even make sense? What is the best way to draw it right now? I personally don't like using this trend line anymore. So what I'm gonna do is I'm gonna go to my log scale instead, and I'm gonna go to this particular method right here, okay? I'm going to make sure that I touch this point, make sure that I respect that point as well, make sure I respect this point, make sure we get in very close just to make sure that we're getting as accurate as possible. So now, all 3 points are definitely touched, right? So what I personally believe we are doing right now, guys, okay, I think that we're actually gunning for, around that particular resistance over there. So let's just say that this one right here, let's see what it actually got up to, okay? Just based on that particular one right there. Well, if this one right here got to roughly a little bit higher than the 261.8 region, then I will gladly assume that it could get up to, roughly one of these regions as well over here near the 231.6. Realistically, it's probably going to end up hitting this particular resistance, in my opinion. So we could be going anywhere between 8250, in my opinion, to 8500. So I want to write this down so that you guys can see this as well. That's what I've been building up to this entire time. So I believe that the next target is 8,250. Okay. Actually, I want to be very clear about this right here, that we need to break this here first. Okay. We need to break this high of 8087. Okay. So please make sure you guys understand this. Okay. A break above 8,087 will signal a rally to 8,250 to 8,500 range. And why? Because I believe that right here, guys, that this is actually just ABC correction happening right here, okay? Let's break it down even further for Elliott wave. And we have to say that, I don't know when it's going to get up there. Don't get me wrong. It could be a very long sideways trend or something like that, right? But I believe it's going to hit roughly one of these ranges. Okay, I took out my log scale there. I got to get back into it because it just came out right there undone. So it could be something like that in there. But what we need to respect is this over here, okay? This could be the third wave, but what I believe, first of all, is that we need to have some sort of ABC that's going to end up correcting, first of all. some sort of A, B, C. Who knows where it's actually going to get up to? But the only thing that I can do is deduce it based on how oversold we are. You guys have to admit that we are fairly oversold right now, right? We're fairly oversold on 2 hours. We're fairly oversold on 4 hour. We're 3 hours as well. Not the daily quite yet, right? Not the daily quite yet. But we also have to respect this right here, guys. Ever since February the 16th, okay, this was the major resistance right here. So always treat, guys, RSI as major resistances as well. So the next major resistance point is kind of this cluster region right here. So as soon as it gets to around this cluster region, right, where we got this point, and this point, that is personally where I believe we are actually going to end up getting to. So there's a lot of ways to go right now. But what I think is going on based on the Elliott wave perspective is this is most likely one subwave right here, okay, where I can easily also count the 5 subwaves going on there on a very minuscule level, right? And that's the 5 waves going up like that. It's really ugly, but it works and it fits the count. And then when we go up towards here, right, we're looking for some sort of ABC corrective pattern in there, which we don't have yet, okay? All that we have is 1 point right now over here. See this? Yes, we hit the 382 level. So there's two things that can happen, okay? A break that's going to happen above this 80-87 range. Now, if I'm entirely wrong, and this right here was actually wave 4 already, and ABC happened already, then guys, it's going to be very easy to tell, okay, if that's actually the right way to go about doing it, okay? So I believe that we're going to roughly get to 8250 to 8500 right there, and it's going to be easy to tell. A break above 8087 will signal that rally, right? But if I'm not wrong at all, and we actually do still have an ABC correction coming down, right, then we could easily see it perhaps level off and even touch the 55 EMA. So my personal take on this is a few things that we're going to do. This is not now a no longer, this is a no trade zone, guys. Okay, I want to be very clear. To me, this is a no trade zone. What I will do is I will end up buying in this particular region if it falls down to here, and I will go long on it as a swing trade. Okay, if it goes down to this region again, take a look very closely. Okay, 74.23 to 75.82 range right there. That is where I will start accumulating Bitcoin, right? Because I will expect one more final wave up to 85 to about 8,500 ranges roughly, okay? But then if we do not end up correcting down here, then the play is very simple. Then the play would be to just buy it on breakout, right? If we break out above $8,087, then that's going to be a very key number for us to acknowledge. So there's many different ways we can play this. So I just want to give you guys my 2 cents with what's going on right now. So let's say like it would invalidate my counts if we actually fell all the way back down to the 7,000 ranges, okay? So you guys have to be very sure that we're starting to get it leveled off right here, and you have to also be sure you know where your stop losses are. But as it stands right now, I do believe that we are gunning for this particular region on the log scale, okay? I'm going to go back to my log scale here. I'm going to draw it as best as I possibly can and just make sure that I get a lot of these points over here. Okay, right here, as you guys can see, this is about the 8,500 region, right? Let's say I ended up drawing, if this was the first subwave, we're just going to call this a first subwave right there, right? Let's say that this is 8,500 ranges right there, and perhaps that's 3, that's 4, and hopefully a 5 ends up breaking well above it. So let's say we actually kept that count right there. This is actually a very valid count as well if we take a look at it, where this is wave 1, right? This is wave 1 right here. Perhaps this is sub wave 1, 2, right? So if we counted it even further, this could actually be subwaves 1, 2, this could be somewhere 3, right? Where this could be 3 right there, or 3. Perhaps there's going to be another fourth one and a fifth one like that, which makes entire sense to me. And then we get a fourth wave down once we hit the 8,500 range, right? then we correct to a specific Fibonacci number over here, right? Maybe to a zero point 0.5, maybe a 382, whatever it is. And finally, for the very last impulse wave, for the fifth one going up like that, perhaps we'll just end up breaking very, very clear out of it. And then we get one more retracement for this entire wave that ends up staying very clear of this log resistance that will now act as a major support. So guys, I've given you guys some of my thoughts and my plays right now. Okay, so my thoughts and my plays is that I either buy on Breakout or I also buy between the 382 and the zero point 0.5 Fibonacci level. So if you guys are curious about my charts that I will gladly post for you guys, I will put this on Steemit where I'd also appreciate an upvote on it. Okay, guys? So it's important for us as traders to not know exactly where it's going, but we plan for these circumstances. Okay? Excuse me, let me have some water. So I personally myself never have the best targets. That's the absolute truth. But what I do know is that I like to plan ahead in advance to see where it could possibly go, right? Because if you know where it could possibly go, then you know that you have planned for every single unforeseen circumstance that can happen. Now, a lot of people have said things before about me, such as, oh, yeah, you're going to guess it's going to go up and you're going to guess it's going to go down. Of course, you're going to be right. Well, that's kind of the mentality of a bad trader to accuse people like that, right? Once again, a good trader tries to plan it for every single angle so they can prepare and they can know how to accumulate. Because when these surprises do happen, they're actually not surprises at all, right? So, yeah, I've got my plans. Will it retrace to the 382 level, like 382 and the zero point 0.5 Fibonacci level, or will it just actually go on the breakout and then we buy it when it goes up and we buy on strength? So those are kind of the two plays that I have in mind right now. And you guys know my position sizes. They're not really anything extravagant per coin. I usually play anywhere between $40 to $50,000 as you guys have seen me, and I'm very transparent about it, right? So 40, 50K, I'll end up getting about whatever 40 divided by 8 is. I'll end up getting 5 Bitcoin or something like that, which is a fairly good amount. If I get 5 Bitcoin and it goes to 8,500 and I buy on the breakout above, 80, 87, well, 5 Bitcoin times, $400 on each coin is a pretty good $2,000 profit. So my risk to reward is something fairly decent, right? If we buy it on a breakout, it would be something like right here, right? And I'll set my stop loss basically slightly below it, actually very, very tight. I'd probably end up putting at 7,900, right? And then I would target about 8,500 right there. So that's my particular play that I've got in mind already, okay? To 8,500, I'm looking for actually not that bad. It's going to be about 7,950. That's probably going to be my stop loss. So to me, I'm willing to take this risk to reward ratio of about 2 to 1. To me, that's very acceptable as a trader. To some other people, it's not really the best because they're much more conservative players. But you guys know myself, I'm fairly aggressive, but I still like to maintain a very safe environment that I trade in where I minimize my risk, I maximize my potential, and I basically minimize my overall losses in general. So, anyways, that's my quick thoughts for Bitcoin. I do believe that we are going to correct. We're going to correct to one of those levels that I mentioned. Check out the charts if you guys want those exact numbers. But if we do not correct to those numbers, just make sure you guys focus on perhaps buying on the breakout above $8,087. So we have to make sure once again that we plan for all of these circumstances that can happen. So make sure you guys are always staying in the loop if you are a day trader or a swing trader especially as well, because I will make sure I'll try my best to update you guys since I technically do this full time for a living, right? I know that it's more fun for me than it is a full-time job, but the full-time job for me is to make sure that I keep you guys in the loop, because the best part of what I do is to see other people succeed as well. So other than that, have yourselves a great day. I apologize if this was kind of a long video, and you guys know what, I actually didn't make a single joke in this video at all. I'm very proud of myself. Oh yeah, I'm proud of myself. Pat myself on the back. That's called a knee slapper moment right there. Knee slapper moment. Oh yeah, pound it, Silicon. Oh yeah. Oh yeah. Yeah. So, anyways, I just wanted to try to be a little bit more professional while talking about Bitcoin. And when I actually don't do a live stream, It's much more professional because in my live stream, you guys rile me up quite a bit all the time, right? And we feed off of each other's energy. So other than that, have a great night. Thank you very much for tuning in. I always appreciate the love and the support that you guys have given me, and I would really appreciate an upvote on Steemit if you guys find the time, if you like the work that I'm doing. Have yourselves a great night, guys, and thank you very much for tuning in. Bye now.